Hey, very good morning to our viewers. Welcome to Hot Stocks right here on 18 hours. Starting
for that. One set of numbers that came out were of air conditioning major Blue Star. Not the best set of numbers. The quarter could have been better because a decline in bottom line coupled with a dip in profits as well. The performance, is it here to stay or will we see a recovery ahead? Because while the sales just showed a minor uptick, the bottom line left a lot to be desired. Satish Jamdar, Managing Director, joins us with more on this. Mr. Jamdar, thanks so much for joining in today. What explains the significant dip in the bottom line? Because that's almost 75% cut in bottom line that we've seen. Why this performance? Is it primarily due to EBITDA? And do you think you can recover in the quarters ahead?
Yes, good morning, Neeraj, Tanveer. Yeah, indeed, there's a steep drop. I think, Neeraj, Tanveer, we talked last quarter. I did indicate to you that we're having pressure on our segment one performance. It happened also the last 2 quarters gradually. Indeed, there's a much steeper drop in this quarter. Let me explain that. Let me also explain the rest of the organization and also what happened, what we want to do, and how things are going to pan out as much as I can. If you look at the results, it's segment one that has got hit. It's essentially contracting electromechanical projects and package air conditioning segment, very closely connected with the construction industry and the projects that go on there. And quite honestly, these are projects which take a little longer gestation period, and of late they've been some of them moving even slower, especially in the building side, construction, buildings, infrastructure, etc. So my view is that this pressure of, shall I say, inflation, costs, etc. may not go away so soon. In fact, the cost of money also seems to be going up. So we indeed will have some pressure on this going forward for the coming few quarters, definitely. Not just Blue Star, I'm not talking of us only specifically, but the whole industry, and therefore whoever is connected with the industry, indeed is going to have this pressure.
Right.
On the other hand, I'll come back to what next. On the other hand, you look at the rest of our segments. In fact, we've done pretty well. Our cooling products division has done extremely well. A growth of 30% on the top line is beat the market, by the way. And if you've been following other players, most of them actually have either degrown or been flat in this quarter. Why we did that was we put a strong push actually from February on. I think I did mention to you that we are getting into the retail side of room air conditioning, and which is what we did. It has been pretty successful for us, and I can only see that this growth should continue for the rest of the year and even beyond. And we also did a lot of work on advertising, pushing our market presence in many territories in the country. And I think that has paid off well. Yeah, go ahead.
Mr. Jamdar, sorry, we're running short of time slightly, so I kind of covering the major points. The point being, I agree that you've done well in certain segments, but overall, the EBITDA margins have shrunk quite a bit. The question to most investors' mind would be, how would you do in the quarters ahead? Would you be hovering around this 4% mark, or would you improve slightly on that front, and therefore the bottom line performance could also be slightly better? Is that something that can happen quarter 2 onwards, or will the entire year stay this way?
Well, to answer you, obviously, Neeraj, I can't hear you now. Yeah. Can you hear me?
Yes, please.
Yeah. Yeah, indeed, my view is that, as I said, pressures will be on for the rest of the year, I think. However, there are a lot of steps we have taken already. One is that the improvement on segment 2 and 3 will certainly help the company. On segment 1 particularly, there are a lot of programs we have launched, started doing very seriously for the last almost 3-4 months now. One is that looking at some of the ongoing jobs which were booked in the past, and they started now getting executed because of inflationary costs and slowing down. We wanted to push those projects, close them quickly, or even short close them, so we are out of those projects which are going slow. Because of the cost increase, etc., many of the projects are either slowing down or they're being sort of descaled. We don't want to get trapped in that kind of situation, so we are pushing that, and so some of the effect you saw was really a corrective factor. Some of this will happen in the quarter 2 and 3. Increasingly, my view, personal view, is that as we take all these steps and as we move out of the older jobs, things will start improving steadily. But still, I think for next 2-3 quarters, clearly there's pressure, and clearly it will keep improving as time goes on, and we are accelerating that process. We'll also counter with going back to customers. If you want to restart projects, to renegotiate costs based on inflation, so all those steps are on. We also strengthen the organization, done some management changes at the operating level so that we put some more energy into the project business revival, shall I call it. So you will see clearly some steps that will start showing up, but because of the nature of projects which are a little longer cycle, it may take a little time to be visible to all of you. That's all I can say at this stage.
Okay, we wish you all the best, Mr. Jamdar. Thanks very much for joining us and giving us a quick perspective on how business is shaping up. That's a Blue Star. Dip in profitability hit by interest costs and margin pressures. Top line has grown by about 6.5% or so, 280 last count on that stock.
What to talk about? We'll come back from a quick break, talk about some other interesting mid-cap stocks which are at news, get you the stock recommendations from our technical experts as well.